Thank you for joining us on the program. This is Business Incorporated live from our global headquarters in Lagos. I am Bosin Amafaya. Welcome you to the program. Let's get started. Morocco considers tapping the international debt markets this year with $1 billion of bond issues. Meantime, Moody's says political tensions and weak economic growth in South Africa are the biggest challenge to its sovereign credit rating. Plus, Bank of England Governor Machete is now briefing on the decision of the Monetary Policy Committee and the economy. Brexit is part of that. Let's get started. We'll begin with the markets, starting off here in Africa. Stock markets in Nigeria and South Africa were looking down at intraday about 12 o'clock Nigerian time. However, the EGX 30 index reversed yesterday's loss, trading high 12,783 at intraday. Looking at the South African market, the GSE about 0.33% in the red. The Egyptian market still above the 12,000. The Kenyan market, that was yesterday's figure for the Kenyan market, about 0.44%. That's Wednesday in the green. A look at the markets in the Middle East, a bit of mixed intraday today in the absence of fresh news to prompt buying. The Saudi stock market index, which slipped 0.1% in the first 45 minutes of trading. On the Nama Chemicals, which has soared in the last few days after announcing an outline of a recovery plan, the Tata Wood pulled back 7.3%, reversed to the green by midday trading about 0.1%. The Qatar market about 0.1% in the green. The Dubai market off track by about 1%, and the Abu Dhabi market, and you can see that at the top of the table, 1.75%. So a big day in Europe for investors eyeing corporate earnings and, of course, waiting for the latest economic assessments from the Bank of England. Mark Carney, the governor, is briefing as we speak, and he's speaking about the latest economic reports and interest rate decision in the UK, of course, when the Brexit button will be pressed by Theresa May, the Prime Minister. Now, let's talk to the side of the earnings and the side of economic things, but more story from Germany, the big bank, Deutsche Bank, numbers, earnings, and what the press briefing looked like about 2 hours ago. Christoph Kober is of DWTV for Channels Television at the Frankfurt Stock Exchange. Christoph, good to have you on the program. Let's get started with Deutsche Bank. You attended the press briefing a short while ago. Bring us up to speed what the directors of the company are saying at the moment.
Bosun, I attended the press conference, and Deutsche Bank is apologizing. That's something you don't hear every day. Deutsche Bank CEO John Crine offered a big mea culpa, a big apology for the transgressions of Deutsche Bank in recent years, particularly about the dubious deals on the U.S. housing market prior to the financial crisis. Now, the litigation of these transgressions is costing Deutsche Bank dearly and has pushed Deutsche Bank deep in the red. You mentioned an annual loss of $1.5 billion, which is the second highest in the history of the bank. And despite this loss, management will also not receive any bonus this year. Now, despite these deeply red figures, management says it has not been such a bad year. At least the core capital ratio is at the highest level in years. And if we talk about strategy, if we look to the future of Deutsche Bank, well, John Crine said there won't be any abrupt changes in the strategic direction, as these have seldomly been successful in the past. So he doesn't want to overhaul everything. What he wants to do is make the bank more digital, Bosun, and that's why I think we're going to see less people working for Deutsche Bank in the future.
Well, Deutsche Bank's story is not yet over. Of course, there are still other issues that the bank would have to clear in other jurisdictions around the world. But let's get into other earnings. Daimler is making big money, making Mercedes and making big money. That is on one side. But if you look at the crude oil side of things, ExxonMobil and Shell numbers for the last quarter wasn't anything good to write home about. Now, talk to us about some of these earnings, in particular from the European side of the Atlantic.
Well, I'll get to Daimler in a second, but first let me talk about Vodafone, the company coming under competition pressure in the UK and in India. That's why it nudged its profit projections for the entire year downward, and that's something that investors don't like. They saw revenue slow in the last quarter, especially slowing down in emerging markets like India, like Turkey, and in African countries. So we see Vodafone shares declining by about 2% here in Europe. Let's talk about Shell. The oil giant has doubled its profit to $4.6 billion last year amid this deal of OPEC countries to limit oil output, which has given oil prices a boost. And that's something that gives confidence to investors. They are buying into Shell shares. They're up about 1.5%. And then Daimler, you mentioned it, making big money off their luxury brand Mercedes-Benz. Revenue at Mercedes-Benz has been up by more than 50%. And so has been the profit for Daimler as a whole, slightly up to 9 billion euros last year. And you have to imagine that because of this rise in profit, Daimler will now pay up to $5,400 to eligible workers in Germany, $5,400 as a bonus. I think I'm in the wrong industry here, Bosun.
No, both of us are in the wrong industry. But we love what we're doing, don't we? Crunching the numbers and helping others watch their money and how they spend it. But very interesting, we also watch interest rate decisions around the world, and the Fed is the big elephant in the room. This is a do-nothing decision. Last December, it was all about there will be interest rate hikes by Janet Yellen in 2017, and that didn't happen yesterday.
That's right, Bosun, and that's what investors are watching. The Fed didn't move yesterday. It didn't signal anything about any interest rate hikes. And remember, investors are anticipating not one, not two, but three hikes in interest rates in the United States in this year. That's why the dollar has moved down to a 12-week low amid the Fed